Hey guys, what is going on? Welcome into the video. So in this video, I'm going to be focusing on a sector that in my opinion is still very underrated for its growth potential, and there are some very nice value opportunities coming up in this sector, and that right now is the e-commerce sector. So in last week's video, I talked about my thesis on Amazon stock, how when it breaks out of this year-long consolidation pattern, in my opinion, it's going to make a move towards $4,000 plus per share, and potential for a lot higher if that stock split catalyst was to play out as well. Just a very low risk play at these current prices in my opinion. But in this video, I'm going to be talking about two international e-commerce players that I'm personally buying on this dip right now and see very attractive prices at these current valuations. A couple of things about the e-commerce sector. Last year in 2021, a lot of these companies faced very tough comparisons compared to the year before, of course, which was 2020, the year of COVID, where e-commerce was pretty much where everybody ordered everything off of, with stores closed a bunch of that year. So they had tough comps last year. This stunted some growth. But in 2022, they're going to have easier comps compared to 2021 instead of 2020, hit their growth numbers, impress, beat expectations, and therefore have great stock price performance. Also, these stocks have taken some massive dips recently, and in my opinion, bring some very, very attractive buying opportunities. So the first stock I'm going to be talking about is Mercado Libre, ticker symbol MELI. I've given my thesis on this company before in a video about a month ago around the business model. They operate and have majority market share in e-commerce in Latin America, one of the fastest growing developing markets with an absolute huge runway for growth. The current market cap is about $55 billion, and this stock, Mercado Libre, is down close to 50% from highs and a super attractive valuation at these current prices, in my opinion. So right now, the stock trades for a current forward price to earnings ratio of about 130, and this seems expensive on first glance, but because this company is going to be ramping up profitability in a huge way over the next few years, this valuation is actually looking very cheap in my personal opinion. It currently trades for a price to sales ratio of 8.62, which is pretty close to in line where this stock has traded historically. But like I was saying, the reason I'm very bullish on this stock is because of the profitability they're going to be ramping up. Here are the analyst projections for Mercado through 2025 in millions. And as we can see, they're expected 30% plus growth in yearly revenue through 2025. And taking a look at the profitability, they're going to be ramping up at a huge rate. And using normalized EPS to measure this metric, in 2023, based on current prices, the stock will have a price to earnings ratio of 63. In 2024, it'll have a price to earnings ratio of about 32. And based on the 2025 normalized EPS projection, they have a price to earnings ratio of about 14.5 based on the current market cap. Now, using these numbers, of course, you can use forward PE and go a year earlier. So for example, in 2023, it'd have a forward PE of 32. In 2024, it'd have a forward PE of 14.5. So that can give you another way to measure those valuations and where you think fair prices would be for this stock. But because they're going to be ramping up profitability so quickly, this stock can very quickly go from being looked at as a high price to earnings ratio stock, very expensive valuation, just a growth stock, that could very easily switch to a value play with the current levels that it's at in just a couple years. So in my opinion, this stock looks primed for outperformance from this current price. And for a company with as large of a runway for growth as Mercado Libre has much beyond just 2025, this is a company that will be trading for a premium at all times in my opinion. I think a price to earnings of 30 to 40 would be a conservative estimate, and a price to earnings of 50 to 60 would be more of an aggressive estimate based on those numbers. Based on the price to earnings multiples in 2025, as long as the company performs up to these projections, the stock price would double from here based on the most conservative of my estimate for multiples that it'll be trading at in the future at that 30 price to earnings ratio. And based on the higher end of my estimate, trading for a 60 price to earnings ratio, this stock would be a four-bagger from current prices, meaning the stock price would be around $4,400 in 2025 with about a $200 billion market cap. Now, of course, anything can happen, but if you'd paid attention these past couple years, Mercado has consistently beat analyst expectations and raised guidance. So if they continue to outperform in the future, obviously it has the upside to blow those analyst estimates out of the water, grow even faster, grow profitability even faster than expected, and therefore the stock price would just move that much more quickly over time towards the upside. Now, taking a quick look at technicals, in the recent drop, the stock found support off the 61.8% fib retracement from COVID lows to all-time highs, and does look likely right now to retest that support level. $1,000 per share is also a strong psychological support level if it was going to get there, but who knows where this stock is going to go in the short term. If the market stays bearish towards growth, maybe the stock bottoms near $950 to $1,000, that past range of support, or maybe it sees downside to around $800 or that $760 fib retracement level. Either way, this is a stock that I'm averaging into at current prices and think is a no-brainer for outperformance in the coming years. Alright, so the next stock that I'm going to be talking about in this video is more of a controversial one, and that is Alibaba stock, ticker symbol BABA. First off, I'll come out and say that I 100% respect anyone who doesn't want to invest in China for moral reasons, doesn't want to deal with the price volatility, or any other reason, but in my opinion, this is the best value opportunity in the market at current prices. So the biggest fear with this stock has came from delisting fears. And don't get me wrong, this could definitely happen, though in my opinion is unlikely. Alibaba recently bought back shares in their US ADR, something that would not have happened if management thought that they would delist from the American exchanges. And also let's talk about what would happen in the slight chance that Alibaba does get delisted. If you hold Alibaba shares, you have the choice to convert those shares into Hong Kong shares, or if you choose not to convert those shares, eventually the holder of ADRs sells your shares and you receive the proceeds in cash for your shares. Delisting would not lose the stockholder any equity, contrary to popular belief. Would the delisting result in lower trading volume? Of course. But does it justify the stock trading for prices that it was 5 years ago? Of course not. That's all it is. You would own Hong Kong shares in the same company without all the delisting fear and panic selling, which honestly may be a better thing for the stock, even though in my opinion this is still a very, very unlikely scenario for the stock to get delisted. But of course anything can happen. As an investor, you have to prepare for any scenario that can happen for the stock that you hold. Now a couple examples of delisting or trading on the OTC exchange. So Tencent is a $550 billion company. It has never been listed on the US exchanges. It trades over the counter on the OTC market and also trades in Hong Kong. Proof that Baba doesn't need a US listing to be a successful stock. Here's another example, Luckin Coffee. The stock was delisted in June of 2020 because of fraud, a much more serious reason than would happen if what Baba was to be delisted. But Luckin, ticker symbol LKNCY, was delisted to the OTC market and Hong Kong shares only and ended up dropping to $5 a share when this fraud happened. Since then, the stock has performed just fine for this fraudulent company. It hit a 52-week high this past year of $17.79 after hitting a low of close to $1 per share and currently trades over $9 per share. The stock averages about 1.5 million in trading volume per day, which is obviously very low, but it just shows that you do not need volume to perform well. Now the fundamentals in Alibaba are unmatched. There's always some talk about the Chinese companies cooking the books. I'll come out and say that Charlie Munger, one of the most successful value investors of all time, and someone who knows the company and numbers behind it way better than I personally do, if he trusts the numbers, then I do. He recently doubled down on his position again, showing his confidence in this current stock and valuation at current prices. Alibaba currently trades for about a 12.5 forward price to earnings ratio, crazy cheap for a company that's still projected to grow double digits for the foreseeable future. A great balance sheet with US numbers, $69 billion in cash and about $27.5 billion in debt. And if we take a look at the long-term projections, like we did with Mercado Libre, they're expected a consistent 15% plus revenue growth through 2025, with profitability rising as well. The normalized EPS number in 2025 would give this a price to earnings ratio below 10, and a more fair and even conservative valuation for this company would be a price to earnings ratio closer to 20 to 25, which would make this stock an easy multi-bagger if it traded anywhere close to those multiples. Also, now taking a look at the technicals, Baba has consolidated in this about $110 to $130 price range for the past couple months and is now nearing a breakout out of that range. If it can break and hold above $130, a full reversal is looking likely, with some major gaps to fill above all the way up to $300 plus per share. Now zooming out of the chart a bit, it's found support off that $110 level of support, which acted as resistance back in 2016 and starting to give a nice reversal look. The 78.6% retracement from all-time lows to highs is right where it found support as well, just adding to the strength of this reversal setup. So overall, as long as the CCP doesn't decide to absolutely destroy Alibaba, in my opinion, look, they want their companies to be successful. They're going to be strict, as we know. In my opinion, Alibaba is not going anywhere, and a bunch of this fear is overblown. So as long as the CCP decides not to destroy this company, this is a screaming buy at this current price point for a great company with a bunch of short-term panic around the stock, which of course creates an absolutely killer buying opportunity. And a quick reminder, of course, I'm in no way a financial advisor. This is not financial advice. Always do your own research and due diligence on these companies before you think about buying stock. Having your own thesis and having your own conviction, that's where it comes. You're having confidence in holding the stock through any volatility, and that's what leads to outperformance in the long run. But that's my thesis on Mercado Libre, ticker symbol MELI, and Alibaba, ticker symbol BABA, two of the most attractive buying opportunities in the market in my personal opinion. I personally am a big fan of the e-commerce sector right now. The comps they're going to be going against last year compared to 2020, I think that's going to be a big benefit for those e-commerce players, and also just very attractive valuations overall for a sector that's going to have years and years of growth ahead of it, especially in those emerging markets. If I provided some value to you in this video, make sure to hit that like button and subscribe button. I would greatly appreciate that. And also, anyone interested in joining the private Discord chat, that's the first link down in the description. You get buy and sell alerts anytime I buy and sell a stock, make a day trade, swing trade, anything like that. You get nightly watch lists for trading ideas the next day. I answer any questions you have and more. So that's the first link down in the description for anybody interested in joining. And thanks so much for watching, guys. I'll catch you all next week. Stay safe, invest, and trade smart, and I'll catch you next time. Peace out.